Are you a first-time buyer, a veteran, someone with significant savings, or looking to house hack? These are all things you need to consider when choosing the perfect mortgage, since the perfect mortgage is not the same for everyone. If you like getting information on mortgages and real estate, make sure to subscribe to this channel for everything you need to know. And leave a comment below with any questions you might have. I'm Brand the Mortgage Man, and I've helped more than 10,000 home buyers over my 20-plus year career, putting me in the top 1% of loan originators nationwide. It's with this experience, I'm going to share the 5 tips for choosing the perfect mortgage. In this video, I'll explain each of these tips in detail and everything you need to consider when choosing the perfect mortgage for you. Tip number 1, you want to understand your eligibility for special programs. Now, there are plenty of different special programs out there. Some of them are bond programs. Here in Florida, we have Hometown Heroes. It's a first-time homebuyer program that will give you up to $35,000 toward your home purchase in the form of a second mortgage. Bond, as I mentioned, we have one here in Florida that gives you $10,000 in the form of a second mortgage. There are new 100% financing options that work the same way, where you can actually have a first mortgage for 97% of the sale price and then a second mortgage with no interest and no payments for the remaining 3%. There are programs through Fannie Mae and Freddie Mac, both agencies that back conventional mortgages that allow for lower interest rates, lower cost of mortgage insurance if you're putting less than 20% down, but may have requirements based on your income and where you're buying. FHA mortgages, VA mortgages, these are all different types of loan programs that you need to know about and consider when you're trying to pick the perfect mortgage for yourself. If you're a first-time buyer, you may qualify for 97% conventional financing, right? You might have thought that you have to do an FHA mortgage to put as little as 3.5% down, but believe it or not, there are first-time buyer programs with conventional loans where you can put down as little as 3%. And as I mentioned earlier, if you can combine this and qualify for a 3% second mortgage using now 100% financing, which is for first-time homebuyers if you have a 700 credit score or above, but if your income is 80% or less of the area median income for where you're looking to buy, you do not have to be a first-time homebuyer to utilize a 100% financing program. If you're a veteran, make sure you check out VA loans. These are extremely beneficial in the fact that you don't have to put any money down, and on top of that, you don't have to pay mortgage insurance as part of your monthly payment. Now, if you're not familiar with that, mortgage insurance, or PMI, is something that you would normally have to pay if you get a conventional mortgage and you're putting less than 20% down, or you have to pay if you're getting an FHA mortgage regardless of your down payment. But what's unique about VA loans is that even if you go with the 100% financing option, which is allowable with a VA loan, there is no monthly mortgage insurance. VA loans have a funding fee, but you may be exempt from that funding fee if you have a service-connected disability through the VA. Tip number 2, evaluate your down payment options. So the size of your down payment could affect the types of mortgages that are available, right? So we talked about there being a 100% financing option, or maybe you don't qualify for that and you need to go with a conventional loan option that requires at least 3% down, right? That's the only loan program that's going to allow for the 3% down unless you're a veteran, or you need 3.5% down to get an FHA mortgage. Or maybe you've owned a home in the past and you don't qualify for a 3% down conventional mortgage. You need 5% down because you've owned a home in the last 3 years, right? These are all things you need to consider when you're looking at loans, because your down payment options could severely change things. We have people reach out to us that say, hey, I'm looking to buy a second home, right? I own a primary home, looking to buy a second home. How much do I need to put down? Well, the minimum down payment to buy a second home is 10%. Or they might call and say, I'm looking to buy an investment property. What's the minimum down payment I need for an investment property? Well, the minimum down payment for an investment property is 15%, right? Tip number 3 is you need to consider the property type and your occupancy of that property. So by occupancy, I mean, are you going to live in that property year round? Are you going to live in that property as like a vacation home, so part-time throughout the year? Or you're not even going to live in the property, you're buying as an investment? These are all things that matter. And the type of property you're buying matters. Single family home, a condo, a multifamily property. Why does this matter? Well, a single family home can pretty much qualify for any type of mortgage. I'm talking about a freestanding home, it can be in a neighborhood, it doesn't have to be in a neighborhood, whatever it is, it's a freestanding home. You can get a conventional mortgage, an FHA mortgage, a VA mortgage, a jumbo mortgage, doesn't really matter. As long as the property meets general lending requirements, meaning it's not falling apart, you can get any type of mortgage on that. A condo, on the other hand, is going to be different because that condo needs to pass specific requirements for lending. And make sure to check out my video about the condo market crash in Florida, and I get into detail as to why condo financing is so much different and more difficult than financing a single family home. And then multifamily properties. Multifamily property is a 2-unit, a 3-unit, or a 4-unit property. Anything above 4 units is not considered residential. We're specifically talking about residential properties. But if you're looking to buy a multifamily property and you plan to live in one of the units, maybe you didn't know this, but we can actually, as a lender, consider rent from the accessory units toward your qualifying, which means it makes it easier to qualify, and you likely qualify for a higher purchase price buying a 2, 3, or 4-unit property than you would if you were buying a single family home or a 1-unit property. So you definitely want to keep that in mind. Tip number 4, assess your financial cushion. Now, not all types of mortgages require you to have money in the bank after you close, which is crazy, but believe it or not, it's true. There are plenty of times we do mortgages where our clients don't have any money left in the bank after they close. I'm not proud to say that, but it just is the case, right? If someone qualifies for a loan, we're not going to tell them they can't get the mortgage just because of if they're comfortable closing on a home, using every penny they have to make that purchase, by all means, that's completely up to them. But there are some loan programs that require you to have reserves, meaning money left in the bank after you close. I personally believe you should have money left in the bank after you close because you never know what could come up after you close. Even if you're buying a brand new home, there's always something that would need fixing around the house. Don't leave yourself without money, although it's not a requirement to have reserves, as I said, with every type of mortgage. Tip number 5, plan for the future. How long do you plan to keep this mortgage and home? That's important to know because the amount of time you plan to keep the mortgage or the house could help determine whether or not it makes sense to pay discount points on that mortgage, meaning paying extra money up front to get a reduced interest rate, right? Because it takes time to recoup that cost based on your savings. And check out my video where I explain how discount points work so you have a better understanding of what I mean. You also want to think about, are you going to refinance in the future, right? Whether it's the near future or the distant future, do you ever plan to refinance? Maybe you've owned a home in the past and you refinance that, or might think to yourself, be like, okay, when I bought my first house, I said to myself, I'm never going to refinance. And then I refinanced 3 years later, right? Well, history tends to repeat itself. So realistically, if you buy a home now, there's a chance when rates drop, you're going to refinance, especially if you've done it in the past, right? So take that into consideration. How will future financial changes affect your mortgage choice? What, are you planning to retire in the next 3 years? Are you going to go to a fixed income after you've been bringing in a salary every single year and that fixed income is going to be a third of what your salary was? Or are you planning to have any children in the future and maybe your spouse is going to take time off of work or just stop working once you have a child and you're going to go from a 2-household income to a 1-household income, right? These are all things you want to consider when you're making the right choice for your mortgage, right? Because this can make the difference between taking a 30-year mortgage versus a 20-year mortgage versus a 15-year mortgage. Because the 30-year mortgage can have a lower payment than that of the 15-year mortgage. And check out my video on this where I explain why someone would choose a 15-year mortgage over a 30 or vice versa. So please utilize these 5 tips when planning for your home purchase. 1, understanding your eligibility for special programs. 2, evaluating down payment options. 3, considering the property type and your occupancy. 4, assessing your financial cushion. And 5, planning for the future. It's important for you to choose the mortgage that not only meets your current needs, but also aligns with your personal situation and future financial goals. If you find this information helpful, make sure to subscribe to my channel so you can continue educating yourself on real estate and mortgages, and make sure to leave a comment below if you have questions about your own scenario. I reply to 100% of the comments left on my videos.